Howdy, folks. It's David Cobb, campaign manager for Jill Stein and the Jammu Baraka. You're watching Democracy in Action on the Green News Network. Remember, the revolution may not be televised, but it will be brought to you on this source of non-corporately filtered news, information, and analysis. As many of you know, we have a very special program. We're doing a full hour to really dive in to monetary theory and monetary policy. We have a very distinguished group that we're going to be hearing from. Warren Mosler is an American economist, a broker, and a true insider in monetary operations. He currently serves as co-founder of the Citizen for Full Employment and Price Stability at UMKC, and more importantly, he really is considered to be one of the founders of what we now know as modern monetary theory. Warren, welcome to the program.
Thank you, and good to be here.
And next, we'll be hearing from Sue Peters. Sue is a member of the Green Party as well as an instrumental figure in the American Monetary Institute. Sue spent 35 years working in technology on Wall Street, and currently she is an advocate and a real leader in advocating for the Green Party's current plank on monetary policy, which they call greening the dollar. Sue, welcome to Democracy in Action.
Great to be here.
And lastly, we'll be hearing from Walt McRee, who is chairman of the board of Public Banking Institute. He also serves as the executive director on PBI. He has a background in media and communication strategies. Walt, welcome.
Hi, David. Good to be here.
So, folks, what we're going to do is actually give each of our three distinguished guests an opportunity to really go deep. And by that, I mean I'm literally going to give each of them 10 uninterrupted minutes to basically talk to us to help us understand their understanding of monetary theory and what they're advocating. I'll then do a very short bit of clarifying questions with each of them, and then so that'll take about 30 minutes, and then we'll just open it up for questions between themselves, but also you. Technical producer Michael O'Neill is standing by, ready to harvest your questions or comments if they are interesting, provocative, and move the conversation along on the comment section. So with that, wasting no further time, Warren Mosler, 10 minutes. Tell us about modern monetary theory.
Okay, well, thank you very much. So I want to start off by saying that what I'll be getting at is that the monetary system itself is not the problem. The problem is how we're operating it and what we're doing with it. So let me give you a few basics that MMT has introduced to the world here. The first one is that the currency is what's called a public monopoly. And in the first instance, it functions to provision government. Now, what does that mean? It means what government is created, and then they want to hire people. They want a legal system, they want a military, they want teachers. Well, how do you get that? Okay, and the way they want to do that is to be able to spend their currency. And so the currency, they create this currency monopoly that functions to provision the government, to be able to hire people to be in government, goods and services. Okay, now, government spending and taxing and borrowing consists of nothing more than crediting and debiting accounts at the Fed. What does that mean? When the government spends money, the Treasury will direct the Federal Reserve to credit the account of whoever they're trying to pay, whoever their bank is. What does that mean? When you credit an account, all you do is change the number in the account to a higher number. If there was $5,000 in the account and you want to add $3,000, you change the $5,000 to $8,000. You change the 5 into an 8. That's all you do. You don't hammer a gold coin into the computer or take a bundle of somebody's cash and try and shove it in there. You just change the number higher. And when you tax somebody, all you do is change the number to a lower number. You don't get anything. There's no ATM where money pours out into the Treasury. All that the IRS does is change the numbers down in your account when they tax you, and all the Treasury does is change numbers up in your account when they spend and pay you. Okay. Now, very important, number 3 here. The funds to pay taxes and the funds to buy government bonds, where do they come from? Okay, they come from the government, unless they're counterfeit. And we all know there are severe penalties for printing up your own money. You're not allowed to do that. So all the funds to pay taxes have to come from the government, which means under close examination, and everybody in the Federal Reserve knows it, I've interacted with the staff for 20 years, they all know that the government has to spend first and then collect taxes or spend first and then borrow. They are not borrowing to get the dollars to spend. They are borrowing, first they spend and then they borrow the dollars they've already spent. And I'll get into that more a little bit later, okay? And what this means, number 4, is that spending is not operationally constrained by revenues. The revenues coming in, the taxes that you're subtracting from people's accounts do not control your ability to spend, because spending is just changing numbers up. In fact, the person who changes the numbers up at the Fed doesn't even have the phone number or the email of the person changing the numbers down. They're completely independent operations. Excuse me here. Okay. So why are we taxing? Taxation creates a need for the thing you need to pay the tax. Call it a tax credit. Okay, so when you slap a tax on everybody's house, now everybody needs whatever it is it takes to get that tax paid, or they're going to lose their house. They need that tax credit. And in the United States, taxes are payable in dollars. Dollars are the tax credits here. And so what taxes do is they create people who are willing to sell goods and services, willing to go to work to get the dollars needed to pay taxes. What do we call people looking for dollars, looking for money, okay, who are willing to work for it? That's called unemployment. Unemployment is people looking for paid work. It's not people looking to volunteer at the Heart Association, okay? It's people looking for paid work, and that's what taxation creates. It creates people looking for paid work for the further purpose of the government now being able to spend its otherwise worthless dollars to hire those people to provision the government, okay? Any residual unemployment means that the taxes created more unemployment than the government wanted to hire. The tax might have created 20 million unemployed, and the government only hired 5 million people. It left 15 million people unemployed. They obviously had a mismatch, okay? The purpose of the taxation is to create people looking for paid work so they can hire them. Okay, they either have to spend more and hire everybody who they became unemployed because of the tax, or they have to lower the tax. Either one will work. Now, let's look at what the public debt is. And I'm rushing through this because I have 10 minutes for a 6-hour presentation. Okay, the public debt, what is that? Those are the dollars spent by the government that have not yet been used to pay taxes. The government spends dollars, they go into your bank account. Only one of two things can happen. You can pay taxes and they're gone, or you don't pay taxes and they're still there. And if you buy something, they're in the next guy's account or the next guy's account, but they stay in the economy until they get taxed away by the government. Okay, all the dollars the government has spent that it hasn't yet taxed, we call that the public debt. Now, why is it debt? It's because it's for accounting purposes a liability. It's a tax credit. Outstanding tax credits that haven't been used, the accountants call that debt. Okay, there's no other reason. And so, again, those dollars remain outstanding in one of 3 forms. When you first get paid, they're in somebody's checking account. Those can be exchanged for cash, or they can be exchanged for Treasury securities. Again, after the government spent the money, some of it can be exchanged for Treasury securities. Treasury securities are simply savings account at the Federal Reserve Bank. You give them, when you buy a Treasury security, you give the Federal Reserve Bank your money, and they give it back to you later with interest, just like any other bank, except instead of calling it a savings account, they put a fancy name on it. They call it a U.S. Treasury security. And how are Treasury securities paid off? And they are, like 45 or 50 billion every month. It's very simple. The Fed shifts the dollars back from the savings accounts at the Fed, called Treasury securities, to checking accounts. The debt, part of the debt is paid. And there are no grandchildren or taxpayers in the room when that happens. It's a monetary operation. It's not a funding operation. Okay. Now, as for interest rates, the Federal Reserve is the only supplier of dollars to its member banks' accounts. Okay. So the policy rates are set by the Fed. Only the Fed can make debits and credits on its own books. Nobody can sneak in at night and do that. Now, my proposals that follow from this will tell you what this all means. Number 1, I proposed a full payroll tax holiday. Simply eliminate FICA. That gives, it's a highly regressive, punishing tax. It shouldn't be let stand by any progressive. And it gives the average family an extra $600 or $700 a month in take-home pay. You stop taking that money out of their pay so that they can live a normal life and they can afford to buy the products that they make. Second, a transition job, federally funded, for anyone willing and able to work. Why? To promote the transition from unemployment to private sector employment. The economy is going to be growing. We want the unemployed to get jobs. Private sector does not like to hire people who aren't working. They only like to hire people who are already working. This creates that environment to shift people from unemployment to the private sector. I propose increasing Social Security to a minimum of $2,000 a month so that older people can live in dignity. And there's no moral hazard with that. It's not like people won't work when they're younger if they think they can get $2,000 when they're 70 years old. I propose a permanent zero rate policy from the Fed. The Federal Reserve sets interest rates. It's been near zero or zero for a while. Japan's been zero for 25 years. Just leave it there. With a zero rate policy, there is no interest on government debt. It's the same as any of the, functionally, it gets you to the same place of the other monetary policies. And I wouldn't let the Treasury issue any securities longer than 3 months.
Got about 2 minutes. Got about 2 minutes, Warren.
Okay. Full deposit insurance in all Fed member banks. There's no reason not to have all deposits fully insured. That's left over from gold standard days. The Fed should provide guaranteed bank liquidity at the policy rate of zero to all member banks. There's no reason to have an interbank market and support that whole cottage industry of traders. It serves no public purpose. More importantly, banks can only do what regulation says they can do. Right now, we tell banks what they can't do. And they always find some new thing that we haven't thought of. That's backwards. You tell banks what they can do, you limit it to what serves public purpose, and leave it at that, and you won't have the troubles we have today. And lastly, I'm going to say federally insured pensions can only invest in Fed liabilities, Treasury securities, cash, and not in the stock market. And these proposals to eliminate Treasury securities and eliminate all this, maybe half or 2/3 of the stock market activity, eliminates a large amount of the sources of the income inequality we've seen in the last several years. I feel it's best to eliminate the income at source.
In 10 minutes, but the reality is, Warren, that none of us get a chance whenever we're trying to talk to actual people on the ground do we get to say, okay, stop, here's my PowerPoint presentation. I want to see if I am understanding this, though. Like, at its core, are you saying that federal spending is not a function of tax revenue coming in? Is that?
It's not constrained by tax revenue. They're just crediting accounts. They're just changing the number. Chairman Bernanke was asked, where did the dollars come from for the bank bailouts? Was it taxpayer money? He said, no, we just used a computer to mark up the balances in their account. That's where all dollars come from. There is no other place. Now, that doesn't mean I'm proposing you can spend unlimited amounts of money without other consequences. There can be serious consequences for overspending, but the consequences are not bounce checks from the government. We're not going to turn into Greece, and we're not going to face default, or we're not going to be down on our knees begging China for dollars. That is complete nonsense. Okay, the long-term financial risks are primarily inflation.
Okay, so I just wanted to make sure that I understood that. So I do want to now thank you very much. That was, in a nutshell, folks, modern monetary theory. I'm now going to turn to Sue Peters to ask her to give us the perspective from the American Monetary Institute. And Sue, you've got 10 minutes.
Let me turn my timer on. Okay. Hello, David, Walt, Warren, and the audience. I am really glad to be here and to add some understanding of our money system. I'm a member of the Green Party, a member of the American Monetary Institute, and I am also a member of a group of Greens that have created the website greensformonetaryreform.org. We created this website to educate Greens and others about a wonderful monetary reform plank in our Green Party U.S. platform called Greening the Dollar. Before I explain how greening the dollar came to be, let me say a few words about the need for monetary reform. The nature of money and the money system excuse me, is not taught in our schools or discussed in our media. This confusion of what money is and from where money comes does a disservice to all of us because our current monetary system is the root cause of major injustices in our society. such as siphoning our wealth to the 1%, while poverty greets more and more of our people. Whoever creates a nation's money has great power to do good, such as funding single-payer health care, or great power to do bad, such as funding corporations that privatize our public services. In sum, the privilege to create a nation's money bestows great wealth and political power. To understand the effects of the monetary system, one needs to look at history. It is only over time that these effects can be seen. Our story, the story of American money, begins in England in 1694. At that time, William III was on the British throne. He had come from Holland, and he wanted to fight a war to protect his ancestral country, but there wasn't enough money. How was he going to get enough money for his war? Well, at this point, some very influential people entered a bill into Parliament, which included a charter for a private corporation called a bank. This bank to be called the Bank of England. According to the charter, the bank would loan gold and silver worth £1.2 million to the king at 8% interest. But in addition, and this was the hidden surprise, the bank was to receive the privilege to print its own private banknotes, another £1.2 million worth, and loan these banknotes out at interest, not to the king, but to the public. The private banknotes were to circulate as money and be accepted for government payments. Well, the bill passed. The king got his war. The nation got the beginning of a permanent national debt. And the bankers got the privilege to create private bank money and loan it at interest to the public. And of course, the first banknotes were taken into Parliament to bribe the politicians. Because you see, Parliament was the only institution that could change the law and take away the bank's privilege to create their money. Slowly over time, the private banks created more and more of the nation's money, first as banknotes, then as accounting entries in checking accounts, all as loans to the public with interest. Slowly over time, the debts of the government and citizens grew and grew. Slowly, the ability of the government to meet the needs of the people was less and less. And slowly, the wealth of the country concentrated in the banks and the powerful corporations they funded. The American colonies, however, rejected this system of private bank money. They refused to charter private banks. All 13 colonies issued sovereign public money direct from their colonial legislatures. The colonies prospered as their public money circulated, encouraging trade, crafts, and farming. But Parliament, under the control of the powerful Bank of England, outlawed the colonial sovereign public money, first in 1751, and then the harshest law in 1763. Benjamin Franklin claimed that within 1 year, the colonies were filled with unemployment and beggars just like in England. The result was our Revolutionary War. We won that war. Our Constitution, under Article 1, Section 8, gave Congress the power to create our money. However, a political war continued throughout the 1800s. The most important national issue was the money question, public versus private creation of the money supply. But in 1913, the Federal Reserve Law was passed. This law created 12 Federal Reserve banks, again with a misleading name, making them appear to be part of the government. But every single share of these 12 corporations is owned by their private member banks with names like Citibank and JP Morgan Chase. And again, this law had a hidden surprise. The privilege and responsibility for creating our nation's money was handed over by Congress to these same member commercial banks and their private bank money. Well, what has been the result for our nation? Funding of 2 world wars and today's perpetual wars. A permanent national debt now close to $20 trillion. Numerous financial crises. The most extreme, the Great Depression, and then the collapse of 2008, where 10 million families lost their homes. Massive inequality and poverty, where the average U.S. household owes more than $16,000 to credit card companies. And the funding of multinational corporations to create cheap products through cheap labor, eliminating American jobs and reducing our living standards. And remember, the bankers have taken their bank money into the halls of Congress and bought off our politicians. But there is most definitely a solution for our nation, which overnight converts the bank money to sovereign public money. In this solution, everybody's money is maintained safe and secure, and all debts are payable. Please look at our website, Greens for Monetary Reform, which explains the Green Party monetary reform plank. This plank was based on the work of Stephen Zarlanga and the American Monetary Institute. In 2008, Missouri Greens made it part of the party's platform with their help. The reform went through 3 years of legal review in Congress and emerged as the NEED Act and the National Emergency Employment Defense Act. Dennis Kucinich courageously introduced this bill to Congress in 2010 and 2011. It is the first plank of the Green Party platform to be made into an actual bill in the U.S. Congress. The website will explain the problem of private bank money, the solution of sovereign public money, and the elegant transition from private to public system. The History tab offers you learning materials for Stephen Zarlanga's book, The Lost Science of Money, which was foundational for both the Green Party, Greening the Dollar plank, and the NEED Act. Let me conclude with describing Greening the Dollar and its 3 parts, and all 3 parts have to be implemented at the same time to keep the power of the creation of money in the public hands. Number 1, the government buys all the shares in the 12 reserve banks, putting them in the U.S. Treasury. Number 2, private commercial banks are no longer allowed to create money. This is accomplished by a change in federal accounting rules. And number 3, Congress creates our sovereign money, spends it for our public needs, and in the process creates tens of millions of good jobs. I end with a quote from one of the students from the Lost Science of Money class. This is what he said. What we use as money is created by private commercial banks whenever they make a loan and charge interest. This is capitalism's most essential feature and completely missing from the study and definition of capitalism. Thank you all very much.
So, Sue, I want to make sure, just as I did with Warren, am I understanding, according to the American Monetary Institute, as well as the Greens at Greening the Dollar, you're calling to nationalize the Federal Reserve, and is that basically right, or at least one part of it, right? And then, so this notion of, and I want to make sure you're saying end bank creation of money in its entirety. Is that right?
Yes.
All right. And then the third plank, would you say that again, just in your own words, rather than just read it off?
The national government issues, the Congress will issue all the new money, all of sovereign money, it's money without debt, without interest. It's an asset to our country and our nation, and it spends it in to the economy.
Okay, so thanks. I know that we're going to get into some deeper discourse and discussion as the American Monetary Institute versus the modern monetary theory and the big picture. But Walt, I wanted to bring in Public Banking Institute because it seems to me like this is a concrete sort of thing that I know lots of Greens and lots of progressives are working on right now. So it felt like, rather than be merely theoretical, and I think theory is very important, but I also wanted to put something very concrete that's actually seems like it's got some legs. So Walt McRee of the Public Banking Institute, in 10 minutes, tell us about PBI and what public banks are.
Okay, thank you. Thanks, David and Susan and Warren. Really enjoyed listening to both of them talk about where money has been and how it's been understood, and also what a kind of a mysterious realm is being created around its management and its creation. Susan mentioned an interesting bit of history about our American history, about where banking, how it got integrated into our economy, and also how it controls our government. And that franchise is really what the public banking movement is about. That is to say that we're looking at having, we want to create banks that are owned by the public, that have the ability to do the magic of banking, leveraging and creating credit, just as banks do in the course of their commercial activity every day. So the public banking movement is about 7 years old. It was started basically from Ellen Brown, who wrote the book Web of Debt, which was a bestseller. And people started to learn some of the things that were just reported about how the banking system works. And it was a real eye-opener that banks were really making this stuff up. And basically the bottom line was, well, gee, if they're making it up, why can't we? You know, why is it that private companies have been given this franchise? Well, the practice of public banking, or the institution of public banks, goes back hundreds of years. There's only one in the U.S. right now. Of course, that's in North Dakota, as you may well know. But going back a couple of hundred years, as Sue said, the Quakers in Philadelphia and the Massachusetts colonists in the late 17th century, they all had their own community-based credit issuing institutions that really vitalized and made those economies stand out. In fact, Franklin, when Franklin went to England, they asked him how things were. He said, things are great. You know, what do you mean? How are things great? People are living in squalor here in London. Well, you know, we give them money. You know, we issue people money so that they can build their houses and start their businesses. And it's like, what? You can't do that. You'll get your money from us. You know, you'll get your money from us, and you'll pay us for it. Well, that's the situation that we have in the U.S. now. That we are beholden to a system of debt, really an institutionalized deception about where money comes from, and managed by institutions that we really haven't had the nerve to challenge. So Ellen's work has been, I think, very important in bringing that forward. Around the world, even though it's only one public bank in the U.S. at the moment, public banks hold about 25 to 40% of the world's assets in little places like Russia, China, India, Brazil, Japan, et cetera, et cetera. They're all over the place. And most notably in Germany, where for the past 200 years, one of the most vibrant parts of their economy is a group of community banks, not owned by the government, but owned by the communities, called the Sparkassen. And the Sparkassen banks are just rocking in terms of making those economies, providing those economies with affordable credit and being able to move business on there. This is what we're doing at the Public Banking Institute, which the purpose of which is to create new city, county, and state publicly owned banks to be able to finance ourselves, to keep our money at home. As Sue illustrated, with how the Bank of England got started, going to somebody to borrow money is costly, and that's their franchise. They're getting rich by giving us money at interest, and of course, interest is in that category of usury, which for thousands of years has been castigated and really in some cases considered sinful by some of the church bodies. But the idea that money could be instead a utility that would be of service instead of a commodity which could be profitized is really is the trend that we're moving toward now. So a public bank employs the same sort of leveraging of capital into the economy that our current banking system does. It's a fractional reserve application, using the magic of banking to be used for the public interest instead of making profits for private interests. Canada has a central bank that is a public bank. A beautiful example of how well it works. When the Bank of Canada was started in the mid-30s, they built the St. Lawrence Seaway, the Trans-Canada Highway. They financed World War II, their education system, their health care system, with very, very little debt. And it wasn't until the 70s when the Bank of International Settlements, the central bank of central banks, came to them and said, look, if you guys want to play in the new global economy, you're going to have to stop issuing money to yourself at no expense, at no cost, because this is what banks can do. You're going to have to start borrowing it from the banking cartel. And that's where we find ourselves today, living in a world of debt on top of debt on top of debt, a trajectory, a hockey stick trajectory of debt, which of course is very similar to the hockey stick of profiteering by the smallest minority of capital interests in the state. The systemic problems that underlie the 2008-2009 financial crisis have not been resolved, despite we've had our 8 years of regulation and reform. A lot of people are expecting this to occur again, that we're going to once again be caught up into this house of cards, which is the banking cartel. But the important thing that we see here is that people realize that new money is created when banks make loans. New money is created when banks make loans. Out of the blue, okay? It's basically an accounting system, as Warren said. It's a matter of changing digits on a ledger of liabilities and assets. So we feel that we can eliminate that systemic risk, the risks of the biggest banks, while preserving the essential benefit, the functions that are needed to stimulate and build our economy by turning these banks into public utilities instead of private institutions. So there are some new technologies that are coming around. Blockchain, of course, distributed ledger capabilities will transform banking in coming years. There will be less and less reliance on these big banks necessarily. We can actually look at the idea of creating credit between ourselves. Of course, that's how flexible, or I should say how potent the banking franchise is. Hyman Minsky said that it's anybody can create money. The trick is to get it accepted. I could give you something and say, sure, I'll accept that. A little bit like barter. But if anybody can do that, then people can do it. Cities and counties and states can do it. And they can do it based on the equity, leveraging the equity and the assets that these institutions or these organizations, cities, counties, and states have. Considerable wealth is untapped and unused by the public. So this is what we're up to here. We want to move the understanding of municipal finance and state finance into the institutional position of being able to have your own bank, so that we can do things like infrastructure financing, like the Bank of North Dakota does at 2% interest. 50% of the cost of infrastructure is private financing. Well, if the Bank of North Dakota can build a school or lend money at 2%, then so can the rest of America. Not only saving a great deal of money in the cost of the money that we need, but also investing in ourselves. Actually, literally breaking the cycle of debt and taxes, debt and more taxes and more debt. Instead, we can, by paying ourselves and borrowing from ourselves, we can invest and create new equity and really transform the way that we're going about financing America, which is why we're naming our national conference in September, the Public Bank Solution, Sustainable Funding for America's Future.
So, Walt, I just want to make sure that I understood a comment that you made. Are you saying that 50% of the, quote, cost of all public infrastructure projects are merely financing, just literally borrowing for the privilege of having money?
Yeah,
so
exactly.
If I'm understanding your argument correctly,
yeah.
a public bank or a city public bank doing a city infrastructure project just saved 50% of the cost.
Yes.
Okay.
Yeah. That's typical. That's kind of on an average, you know. But McRee Kennedy, who was an economist in Germany, said about 40% of everything that we own is of the price of everything we own is finance, is interest. So it's the cost of finance that has raised the cost of our living, and that's really the boogeyman.
So I got to say to all three of you, we have a very large audience. It's a very robust audience. There are questions coming in fast and furious. I want to get to those, but I'm going to give each of you an opportunity, starting Warren, Sue, and then Walt. If there is either a comment or a question that you'd like to direct, please be short and concise. I'll give that opportunity, and then I'm going to circle back around to some of these questions and comments coming in. So, and if you feel like you just want to go right to the audience, we can do that. But I'll give you this opportunity. Warren?
Let me just zero in on one thing, and I could do the same with many of these parts. And I want to say I support all the core values of the Green Party. Okay, I'm here to try and help this move along. But when I hear this thing come over and over again about the Fed being private, it's absolute nonsense. It's fully controlled by the Federal Reserve Act. You know, the chairman's appointed by Congress. Chairman Bernanke said, look, I take my marching orders from Congress. All their profits are turned over to the Treasury. You know, there's nothing private about it. Now, there are what are called shares, and I used to be a shareholder when I owned a small bank. And as a shareholder, it was nothing more than a deposit at the Federal Reserve Bank. I had $100,000 worth of shares. They had my money. They paid me 6% interest at the time. They never called me to talk about bank policy or monetary policy, nor did they call any other bank. There are a few $1 million worth of deposits at the Fed that are called shares from something that happened a long time ago that's no longer applicable, and there's just absolutely nothing private about the banks. Now, let me just give you one more thing on that.
You're going to have to be very brief because we're going to give everybody a chance.
They have to be federally chartered, or they can't operate. They have their funding because of deposit insurance is federal funding. Okay, the Federal Reserve Act regulates every loan they make. I had a bank, the regulators would come in and examine every loan we made. And if they didn't like it, they would put severe penalties on us. They regulate their capital and tell you what it has to be, all the asset quality, the management. They can come in and change the management. If they didn't like what our bank president or treasurer was doing, they'd change it. If they didn't like the way our earnings were going, they would make changes. They controlled our liquidity. They would not let us lend long and borrow short or whatever they wanted. They controlled every single aspect of the bank. They gave us the ability to price the risk. We could set the rate for the loans we accepted, you know, and that was it. So it's much like the military. Okay, you control everything, but you let the soldier aim before he shoots, and he has a little bit of leeway. But basically, he's totally controlled by the federal government. So this whole idea of this privateness is, you know, it's disappointing to hear it because that's not the core problem right now. The core problem is the total failure of government regulation of their own banking system and their own asset they've set up for public purpose and haven't followed through with.
So, Sue, I'm going to go to you. You've had a chance to hear from both Walt and Warren. Any comment or question before we turn it over to the audience?
Well, every single share of all 12 regional Federal Reserve banks are owned by the member banks. It's in the Federal Reserve law. They're the only ones who can own the shares. The presidents of those Federal Reserve banks sit on the Open Market Committee in the New York Fed. They sit on the advisory committee, which meets 4 times a year. If I wanted to leave my retirement and go get a job on Wall Street again, I could apply to the New York Federal Reserve Bank right here in New York, and I would be a private employee. I would not be a public employee. Okay.
So, Walt, I'll turn to you again before we go to the comments or questions that are streaming in.
Okay, well, just quickly, I would also point out that Ellen Brown, our founder of Public Banking Institute, was the candidate for the Treasury for a Green Party candidacy. And of course, Jill Stein and the Green Party has a platform supporting public banking. But Sue, I would ask you, you had mentioned that in your theory, AMI theory talks about having Congress determine how much money is in the cycle or is in the system. How do you expect that to be able to reflect the dynamism of the economy when it needs more money and it has to go through a political chicane to be able to get it created?
Well, I hope I didn't say that Congress would decide how much money is out there, because Congress is deciding how much money they want to spend and to who to give it to, right? But in the Greening the Dollar reform, in the NEED Act reform, there is the current board in Washington, which is not a bank, there's no money there, it's just people. That board is dissolved, and a monetary authority in the U.S. Treasury, and in the law, the NEED Act, this monetary authority is totally independent of the treasurer of the U.S. This monetary authority, their goal is simply to monitor the money supply. They want to know that it is not inflationary, it's not deflationary. So any time that Congress passes a bill and authorizes the spending of sovereign money, they have to go and pass the monetary authority. So that's the check and balance.
So let me now just go directly to some of the comments and questions. Howard Switzer asks, and this is to you, Warren, how does monetary theory propose to change our macroeconomic reality?
Okay, so the proposals I went through changed the macroeconomic reality. And let me add that, as a Green Party supporter, I see unemployment as a major cause of environmental degradation. Okay, people do things to the environment for money because of unemployment, because they need the money. Once you create an economy, a society where there are good paying jobs for everybody, willing and able to work, you take away that whole motivation to destroy the environment. Nobody's going to do that if they're got a good job with good pay and don't have to do it.
So thanks for that. So I want to turn to Mark Buckman, who says, understanding modern Marxist theory is critical to the Green New Deal, which of course is the linchpin for the Stein-Baraka campaign and it's sold to the Green Party's platform.
Critical of what? I'm sorry?
For the Green New Deal, which was the sort of centerpiece of the Stein-Baraka campaign, as well as the Green Party's platform.
Yeah.
Marcus goes on to say, we simply can't tax enough to pay for it. I'm wondering, to all of you, does that sound right to you, the Green New Deal and how to fund it? And just reflect on what you heard from Marcus. Again, I'll give each of you an opportunity for a short response.
Right. Well, the way I would do it, I'm proposing is to use ordinary deficit spending combined with a permanent zero rate policy and the Treasury being limited to 3-month bills. Now that sounds technical, but what that does is it accomplishes exactly, it's functionally identical to what they're trying to accomplish by these other things that don't have actual operational existence. So we can do this, we can move forward under the current institutional structure by doing those 3 simple things. And that's why I support them. It'll get us from here to there tomorrow. It doesn't require these optical illusions. It's like, we don't have to, it's like saying we want to, we want to save energy by repealing the law of gravity. Well, it's semantically incorrect. the Fed is already privately owned. Yes, there are shareholders, but they're not normal shareholders. They're the same as bondholders. They're the same as bank depositors. There's nothing more to them. I own the shares. I know it. So anyway, I'll move on.
Yeah, no, again, it's a complex conversation, and there's a lot here. And I promise I would like to have each one of you back on my program that I do weekly to really go deep one-on-one with you. Sue, the Green New Deal, you want to reflect on that as a Green Party member? I know you're familiar with it.
Right. And I didn't quite understand the question, David, because there was an echo. So can you repeat it?
Sure. So Marcus just said that he thought that understanding modern monetary theory was critical to being able to implement the Green New Deal. We simply can't tax enough to pay for it.
Right. Well, the greening the dollar plank, which is the NEED Act, right? The sovereign money that would be created by the federal government and spent could be directed to whatever the Green New Deal wants. That's number one. Number two, I don't know if I should get into this. It's deep inside.
Only you can do it succinctly.
No, I can't.
Fair enough.
So that's sovereign money. It's like our colonial sovereign money. The colonies spent it in. They built bridges. They built a market for the farmers. We could take our sovereign money. We could give people health care, single payer health care. We could give people Social Security that they wouldn't have to worry about it going away. These are just basic things that a sovereign money can give to its people, and it has in the history of the world. That's why Stephen's book is so phenomenal, because you go back in history and you see how sovereign public money meant a good life for the people in those countries throughout the history of the world when it was used.
So I will tell you just very quickly before I go to you, Walt, that Gregory Paul Smith says sovereign public money is vested in Congress. Sue is absolutely right about that. So, Walt, I want to get you to the Green New Deal and the sort of the financing of it and how you see a public bank playing into that.
Well, I think that Sue speaks and Warren speaks of the myth that we're living in, that the money is scarce, that we have to go out of our way to scrounge it, save it, and all that stuff. And we would absolutely say there needs to be a quantitative easing for the people, in which the Fed creates, in which we can simply spend into the economy the money that we need for infrastructure and for a whole host of the other things that are on our plate. Creating money out of nothing it's a ledger exercise. It's an accounting exercise. So municipalities are also in a position where they can, within the framework and within the context of assets, liabilities, and balancing, able to extend to themselves the credits that they need to get the work done, and they pay themselves for it. So absolutely, the Green New Deal, call it what you like. We have a lot of work here to do that we can afford to pay for simply by issuing it into existence and by spending it into existence.
I want to go to Brian Davis, who says that there is a bill in Congress now to eliminate the Senior Citizens Employment Program, and he's wondering if any of you have any thoughts on that. I'll be candid, I don't know what that is, so I could not answer it. But if I'll just start with you, Warren, and run through you all. The Senior Citizens Employment Program being eliminated, how do you, as a MMT advocate, feel about that?
Let me just take 15 seconds and say sovereign money, quantitative easing for the people, public banking. It's all functionally identical to ordinary deficit spending. There is no difference when you get down to the debits and credits. And that's what MMT is all about. We've already got this. We just have to understand how what we have works and use it for exactly the purpose they're talking about. Now, in terms of senior citizens,
by the way, Warren.
Yeah, I don't know the specific law, so I can't comment.
I got to tell you, an excellent use of 15 seconds. Sue.
I'm not familiar with the law.
Walt?
Well, I would just throw in, I think it's ridiculous that we're cutting out benefits for human beings, for the citizens of the country, when we're not scarcity. We don't have to have austerity. The myth of scarcity is part of what's happening in this revolution. There's plenty of money. There's plenty of resources for us to get what we need. We're not short of the ability to do that.
You know, I will say again, I followed each of you, I think, whenever you were speaking. I know that there's some disagreements here that I think is sort of beyond me, but one of the things that I think that I come away with is a real a confirmation of what I've heard and I've always sort of known, and that is money is a construct. Like, we're just creating this idea. And it does seem to me that there is something very powerful about the need to engage in genuine political education about just how much power we, the people, are supposed to have over this construct of money and how it is actually constructed and therefore utilized. And again, the differences, I think, are I'm not trying to paper over them. I'm saying that there is something that I think that all three of you are moving in the same direction, even if there are some pretty profound differences as well. I do want to get to Harrison Schultz, who asks, the NEED Act is based on empirical historical research as opposed to vague jargon-laden theory. Would it be easier to bring back the U.S. Post Office banking system rather than create new financial institutions? So it feels like that's really to Warren and to you, Walt, in different ways. So I'll ask you, Warren, to reflect or comment on that comment/question.
Okay, so we already have the commercial banking system, which are all Fed members, Fed charters, and fully subject to congressional will in the Federal Reserve Act. And if there's something about them that we don't like, that we'd like to see changed to make it, you can just do it. Congress can just do it. Now, to assign the job to the post office rather than the banks that are already there, to me, that's just inefficient. We can already change the way the banks are doing business at will.
Walt?
I would disagree only in the sense that the community banks, private banks, are there to make a profit for shareholders, and that's fine. And community banks and credit unions both are really, really critical for our local economy. So I'm not putting banks down at all. The aspect of private ownership is what we're really talking about when we talk about having to borrow from private capital for our public needs, for infrastructure and so forth. So, but the Postal Service is a terrific spot for banking to take place, especially for people. About 25% of the people don't have banking relationships. I think it's even more than that. And all over the world, postal banks play important, critical roles in local economies. So we're absolutely in support of that. In fact, PBI was at the forefront of helping to move that forward a number of years ago. So we hope very much that the Postal Service will be able to recoup or recover that service that it had up until about, I think, 1964, somewhere in that vicinity.
So a couple of comments and then a question. Don Neptune Adams writes in, yes, with an exclamation point. Turn the banks into public utilities. So really, I think an attaboy or way to go to you, Walt, I think. Then we also have a question that Michael Zubas asks, how would credit unions work in the new banking system, in a public banking system? What's the difference? Like, what role do you see for credit unions? Well,
both community banks and credit unions serve a specific audience and a specific, typically geographical, but not always, area in which they're engaged with lending credit into the local economy. The public bank model is a little like that, except that it's on a governmental level, where as in North Dakota, all of the tax money, the revenues that are acquired go into are deposited into the public's bank. And that bank then leverages its capital and leverages its capital to get things done that the public wants to get done, not individuals. So if you want to buy a house or you want to start a business or get a car, The community banks and credit unions are on the front line for that. Our modeling for the public bank is that a local public bank would partner with these local financial institutions to make the economy work, the local economy more robust, more resilient, and also to make a credit more affordable. As in North Dakota, again, students can get loans there for 1.75% interest on an adjustable basis. There are special programs managed through the credit unions and community banks to stimulate small businesses. There are a host of projects like that that community banks are perfectly suited to do, but that with the partnership of a public bank, they're newly able to do it, which, by the way, is one of the reasons that community banks and credit unions in North Dakota are 3 to 4 times more profitable than anywhere else in the country and more numerous.
So William George makes a comment, and then I'm going to turn to a specific question to you, Sue. William George says about and asserts, and I confess I don't know if this is true, but he just says $500 million per day is going from our pockets to the pockets of bankers in interest, fees, and commissions in the U.S. and the United Kingdom combined. A big cause of inequality, he says. Donald Oak says, I'm all for nationalization of our banking system, but do it within our current operating system. Then I want to make sure to get to this question that's directly to you, Sue. Joseph Firestone asks, how would the monetary authority determine whether the monetary supply was sufficient to support a healthy economy while not being so plentiful that it would create inflation? So that's a question directly to you.
Well, there are already in place many financial indicators that bankers, the Federal Reserve, the Treasury uses to indicate the supply, the money supply, whether it's inflationary or deflationary. So none of that is new.
Okay, so listen, I got to say that questions are pouring in. We're not going to be able to go to all of them, but again, I'm going to right now request that each of you be willing to come on one-on-one with me in a normal 30-minute program so we can really go deep, and rather than some of the back and forth that had to happen in a program like this, get a chance to go deeper. But I am going to give everybody a chance for sort of a wrap-up, thoughts, reflections, and any exhortation, URL, book, however you'd like to end your comment to our viewers. So we're going to start with you, Walt McRee. Your final thoughts in about 2 minutes.
Well, I think we're living in a very exciting time. This is really a pivotal, sort of a revolutionary moment where people have suddenly looked behind the curtain of the fraud, if you will, or the game of banking. We see that there's really nothing there, that we've handed all of this power over to a bunch of private interests who have been taking us over the coals for decades, actually hundreds and hundreds of years. Well, now we've realized that, and I think in some ways the public banking movement is a second American Revolution, where we're taking the power back into the hands of the people by being able to get, by accessing the franchise for the public interest. Let me encourage people to read Ellen's book, The Web of Debt, and also The Public Bank Solution, both excellent tomes, and also then to go to visit our website at the publicbankinginstitute.org. We've got activities going on around the country. Over 50 different markets are looking at public banks, cities, counties, and states. Love to have yours online.
Fantastic. Thanks so much. Sue, let's go to you with some concluding comments and reflections.
Okay. People should just keep in mind that greening the dollar and the NEED Act, what we want to do is we want to nationalize the money. The banks, we do not want to nationalize. The banks have a role to play as private banks, but what we want to do is make banks the same as any other financial institution. Instead of what they are now, they are driving our nation into the ground. They are raping our nation. They have that power because they have been given by law the power to create our money. And I just want to say also that people should keep in mind that The sovereign power to create money is decided in law. It's in the law. And also I want to say that people should really look at our website, greensformonetaryreform.org. We've worked very hard at it this year, and I think it has a lot of really basic information for people. Thank you.
Wonderful. And now let's go to you, Warren Mosler.
Yes, I'd just like to conclude by saying, I'm a supporter of all the core values of the Green Party, and I'll offer my support in any way you'd like to try and promote that. So, and thank you very much for having me on the show.
Thank you very much, Warren. So what I'm going to do in sort of as a final wrap up is to actually invite each of the three of you and the many people that you clearly have inspired, because again, we're still getting comments and questions that are coming in. But I have the privilege of working with a group called the Liberty Tree Foundation for the Democratic Revolution, which convenes a democracy convention every couple of years. It's a series of conferences on individual sectors that is sort of an interdisciplinary approach to building systemic political power in a democratic way. It transcends political parties. It transcends so much. But I would love to go deeper and invite each of you to participate in, and I have this vision of each of you doing a workshop at the Economic Democracy Conference within the Democracy Convention, and then ultimately put you all on a panel to sort of, in a public way, let you talk to each other about this. Because I know I am a student of monetary policy. I'm learning from you and people like you. I know I've got a lot more to learn, so I really want to make sure to invite you. It's August 2 through 6th in Minneapolis, Minnesota. Go to the website democracyconvention.org, and Warren, Walt, and Sue, I'm going to be following up with each one of you. And again, I want to thank you all three very much for a rich, valuable conversation. Good night.
Great. Good night.
Right. Thank you.